What's up, everyone? How you guys doing today? Hopefully everyone made some money today. There were lots of opportunities. If you guys didn't find anything to trade, tonight is going to change the way you look at the stock market. I'm going to show you the easiest way to make money in the stock market that is 100% stress-free. And if you understand flow trading, you're going to understand why it's stress-free. Takes a while to get there. A lot of people don't believe it. A lot of people don't trust it. But then when they come around and understand what it's all about, it's like a whole new world has been opened up to you. I literally trade with zero stress these days because all I'm doing is basically following someone else into a trade that is a lot smarter than I am. If you don't believe whether this stuff works, we have a recorded history of the types of trades we're going to be talking about. On the screen right now, to start off with, are all the ways you can find me. I am 7-Star Mike. I want you guys to be successful with Black Box. So there's plenty of ways you can find me. Ask those questions if you guys are not sure about what the right flow to follow is. Reach out, ask those questions. Don't be shy. After a while, you won't have to reach out because the material, I think it's pretty straightforward. There are a few times where we're going to look at some flow and kind of be confused on it a little bit. But the good news is when we're confused about flow, we just move on. It's not the right stuff we're looking for. So if there's any confusion about flow, we just don't follow it. We're looking for very specific stuff. When we find that very specific criteria, we've got an amazing track record of making money. So again, on the screen, those are all the different ways you can find me. On 7-Star Mike, I kind of post some stuff about what I'm doing personally. On Trade Talk Media, that's more of like the educational side of things where I post there's some specific flow trades on there. And then I'm going to start trying to do some more educational stuff on the hows and whys behind all this, which is basically what tonight is all about. I'm going to start by asking you guys a few questions, and then we're going to get into a seminar. There's going to be a Q&A session. And I'm going to show you the hows and whys of what we do. I'm going to show you the results of what we do. So let's get started with that question on your screen. Let me know how long you guys have been trading, so it gives me an idea of the experience in the group here. These questions won't be on the screen long, so just go ahead and pop an answer in there real quick. And then we're going to move on. There's usually a pretty good mix of people here, from brand new traders to those who have been trading over 5 or 10 years. So a really good mix of experience overall. And tonight is no different. The results tonight are very mixed, anywhere from, let's see, the majority is 6 months to a year, and the next biggest group is 1 to 5 years. So pretty good experience in the group here. I'm going to close this poll up. If you didn't get a chance to answer, no worries. There's another one on your screen. Are you consistently profitable? Now, by consistently profitable, I mean you can have losing trades, you can have a losing day, but at the end of the week, at the end of the month, at the end of the year, can you rely on trading to generate an income for you? If you're answering no, you're not alone, because the split for this question is usually 80-20, with 80% not profitable. 80% are usually not profitable. So I'm going to give you guys a method of trading tonight that will make it extremely easy to figure out what trades to get into, and they have a very high degree of profitability. There's a really good chance that when we take these trades, we're going to make money. We've been tracking certain types of trades going back to October, and going back to October, right now we only have 1 loss on those trades. So pretty good record. I'm going to close this poll up. Tonight, the results are 79% are not profitable. So I hope to change that for some of you guys by, again, giving you a pretty easy method of finding what trades to be in. And last question on the screen there, how long have you been with Blackbox? Lots of experience for trading in the group, but how long have you guys been with Blackbox stocks as a trader? This one is usually a lot less than the amount of time people have been trading, which is good. I like to catch you guys when you're pretty new with the group so I can get you before you start any bad habits with the scanner. Tonight is no different. 49% of you guys have been with us for less than a month. 36% 1 to 3 months, and then really small numbers after that. So you guys are basically somewhat experienced with trading. You're pretty new to Blackbox. So I'm going to give you, again, a very simple, very easy way to trade and make money. You don't have to be a genius. I'm an idiot, but it works for me. You don't have to be trading for 150 years. I've only been trading full time for 5 years. And yet, this system makes me very successful. Now, you can sit there and say, how successful and how good does this work? For the moment, I'm going to jump over to StockTwits. I've posted videos on this a bunch of times, so you guys might have seen this. Starting with today's trades only. So Netflix, we had this, the flow itself might be hard to see on your screen. Hopefully it's not, but we had a $1 million sweep in Netflix. And then if you guys saw what happened with Netflix, it kind of took off today. What I like about StockTwits and why I'm using this is because down here it shows you since the post what the trade did, or the underlying itself. So when I posted this flow, these trades go out live on StockTwits. Netflix went up $8.76 after I posted that flow. And that's not just a fluke. You can say, well, everyone has a good trade. So let's move down to Airbnb. It was up $5.79 after I posted that flow. Square was up $4.80 after I posted that flow. VFC was up 26 cents. So we're not even going to call that successful. That's just whatever. You're probably flat on that trade. 4/16 expiration though, so it didn't really have a chance to move yet. There's time on there for it to move. Visa was down 14 cents, but Visa expires in June, so plenty of time for that one to work out. MU was up $1.35 since I posted that flow. JMIA is up $3.29 since I posted that flow. So you can see that even when you're wrong with some of these trades, now these are just today's trades. So even the ones that we're wrong on, they're only down 30, 40, 50, 60 cents, something like that, right? So you're not losing money on those. Now, it doesn't mean you won't in time before they expire. Those might drop on us. But the amount of trades that are successful with this system way override the ones that aren't. And that's just today. So let's go to GM. This was yesterday. GM's down 12 cents. Down 12 cents, you're not losing a lot of money on an options contract. This one expires 4/16. So there's still time for it to work out, but it's only down 12 cents since I posted that flow. Team is up $5.64. Now this is the underlying. So the underlying is up $5.64. The contracts for options are going to be up a lot more than that, percentage-wise. I don't know about dollar-wise, but this is up 2.47%. These options contracts are going to be up a lot more than that. A $5 move on options is going to give you a really good return. Box, this was posted yesterday, up $1.39. SLB, down 40 cents. So you can see I'm not cherry picking the best of the best. These are all the trades that I decided these meet certain criteria to catch my eye. So I'm not giving you just the trades that worked out. These didn't work out, but it's only down 40 cents and it expires in June. So down 40 cents in an options contract, that's not going to hurt you too much. NKE, this was posted yesterday, up $4.22. So you guys are starting to see that when you select the right type of flow, GM up 9 cents. You're not making money on a 9-cent move, but you didn't lose money on it yet. And the expiration is 9/17, so plenty of time on that one. $1 million buy into Yeti. What did Yeti do? It's up $1.51 since I posted that. And I'm just going through the list of all the stuff I posted live. Baidu up $7.77. So you can see I'm not posting every single thing I see from the scanner. PLTR is up 251. I'm pretty specific about what I post from the flow. TSM is up $5.10 since I posted this live. Nike, this was from the day before, $4.40. So there was two different trades on Nike. APHA, up $2.24. Baidu, $19.56, up from when I posted this live. You can see I'm just scrolling through this, guys. These are just the trades that I picked from the flow that caught my eye for one reason or another. These are the trades that I like. Facebook up $10 since I posted this flow. Roku up $37 since I posted this flow. ZM up $42 since I posted this flow. So you guys can see that when you pick and choose the right trades to follow, Disney, this one's down 259. So you see how many trades we had to go through before we got one that dropped over, 60 cents. And this expires 5/21, so it's down 259. That's going to hurt the contracts a little bit. It was a little bit out of the money already, and it's down 259 more. So let's call this one currently a little bit of a loss. There's still time for it to recover. DDOG up $3.52. So I'm not going to go down the entire list of everything I posted here, but you can see how many trades I'm posting here over the last few days and how many of them are either flat or generating a profit. And again, I'm not some genius trader. I'm not deciding what contracts or what tickers to trade. All I'm doing, if you look at every one of those posts, that's all based on flow. So every single one of these has a picture of flow. So I'm not deciding what ticker to trade. I'm literally just watching the scanner, and the scanner is telling me what to trade. I had no idea I was going to trade Square. I had no idea I was going to trade VFC. I was no idea I was going to trade V. These are names that I might be watching. I might have no idea. JMIA, no idea that was even on my radar. But when I see certain flow, I'm going to trade it. This one's up 329, and this one actually got a CNBC pump. So a lot of the stuff that we pick here ends up being those CNBC callouts. And again, it's not because we're some amazing traders. It's just because we know what flow to look for. We know what trades to follow and what to ignore. And tonight is going to be about pointing out what the data even means, first of all, and then letting you guys know which ones, like what criteria are we looking for? Why does this flow look good and why does this flow look bad? So I'm going to give you a PowerPoint presentation. Then I'm going to give you a checklist of the things that we're looking for. So the PowerPoint presentation is kind of going through the data and what it means. And then there's going to be a checklist that basically tells you what exactly am I looking for before I get into a flow trade. And then you guys can kind of go through this here and look for different examples of the stuff that I'm picking out throughout the day. So you can see there are a few losing trades in here, but they're down 60 cents, 40 cents with plenty of time on them. That doesn't mean they're all going to work out, but the ones that are up $4, $7, $40. Those are going to way outweigh the cost that you're basically sitting in those losing trades while you're waiting for them to turn around. Or even if they don't turn around, if you end up taking a loss. If you take Square up $4.52 on an options contract, that's going to pay out pretty good. And that's going to cover a loss if you take one that's maybe that Disney is down $2. JMI is up $3.07. So if you take that trade, that's going to cover the loss of the Disney. The GMs haven't gone anywhere. Team is up $5.64. So if you take that trade, that's going to cover the loss of maybe a Disney. But again, the ones that are losers on here haven't expired. They're nowhere near expiring. So there's a chance those make money. So what I want you guys to really understand about flow trading is that we're very specific about what trades we're taking. There's a bunch of information on the scanner, and guess what? The way Charlie and I trade, we ignore almost all of it. We ignore almost all of the scanner. Now, Charlie and I trade a very specific way. We're both looking for the same stuff. So throughout the day, we might text each other and say, hey, I just wanted to make sure you saw this particular flow. And regardless of who's texting who, the answer is always, yeah, I saw that, I'm in the trade. We trade the exact same way on almost every trade that we take. There's a few differences here and there, but pretty much Charlie and I trade the exact same way. And it makes sense because I learned how to flow trade from him. We've kind of dialed in the information, and you can see that the types of trades we take are very specific. You're going to see the same examples over and over. And if you guys are on Discord, there's a room here called 20 Trades. 20 Trades is a mentality that we have, and it's basically the concept that says, if your broker called you up and said you're only allowed to place 20 trades the entire year, what trades would you take? So if you go through this room, you're going to see examples of the types of trades we're looking for that is very specific. And again, I'm going to give you the guidelines of what those are after we go through the data and what it actually means. But I want you guys to go through this room that's labeled 20 trades. This room is, if you were only allowed to place 20 trades the entire year, this is the flow that you would follow. And it doesn't mean you're only taking 20 trades. There's more than 20 trades in here. But if you were only allowed to place 20 trades, this type of flow, when you see it, these are all examples of the trades you should be taking. Now, I haven't updated this in 2 weeks, actually. I'm a little behind on this. But if you go to the max price column, you can see that so far, none of these are zero, which means at some point when you were in these contracts, they've all generated a profit. Now, Netflix over here is the troublemaker. Netflix, the maximum you could have got if you got in at the same price I did, and if you exited at the absolute peak of the contract, which isn't realistic, the most you would have got was 6%, and now it's actually down a decent amount. So trade management is extremely important here. So I don't mean there were no losses on any of these trades. For me personally, I haven't had a single loss yet. Netflix is looking like it's going to be the first one. So out of all of these trades, I have not had a loss. Some people have, and that's because of their trade management. It's different from mine. So when I say the maximum price on this Disney contract was 742%, I didn't get out at 742%. That's the maximum price of the contract. So I was in at 584. I was not out at $49. I was out way before that. But when something goes up 700%, 500%, 400%, do you think it's realistic that you can capture 100%? Even 50%? So if you're in at 625 and it goes up 132%, it goes from 625 to 14. Do you think you could have captured 625 to 825? Maybe a cool $200 on that contract. So the maximum price on these is showing that these trades are doing very well. There is a drawdown. So once we get into the trade, this is how much we would have seen them drop before they went on to go on to make this maximum gain. So if you have a 20 or 30% stop loss, you're getting stopped out of a lot of these trades before they have a chance to make this max price. This one dropped 35%, 34%, 36%, 41%. So if you have a small or a really tight stop loss, you're getting stopped out of these trades before they have a chance to even make these gains. So again, we're very specific about the types of flow that we're taking. If you go through this 20 trades room, these are examples of what we're looking for. You can go to that Trade Talk Media on Stock Twits, and you can see the specific stuff that I'm calling out. These are the trades that I like. It doesn't mean I'm in every single one of these, but if there's a post that I put on Flow Trades for Trade Talk Media, if I'm posting there, there's a really good chance I'm in these trades. Now, I'm not in every single one of them, but if I post something here, there's a really good chance that I am. So people ask all the time, they say, how come you don't post all your trades live? I actually do. I just don't say that this is a specific trade I'm in necessarily. Sometimes I do, sometimes I don't. But the secret is that if there's something posted on Trade Talk Media, I'm either in that trade or I'm watching it with a really good chance I'm going to be in it. And if you guys go through this again, just click on the post and it'll show you in the bottom, since I've posted this one, what has the ticker done? That's why I kind of like the Stock Twits format. There's a lot of stuff you have to weed through if you're looking for specific tickers on there. But when I post something here, it keeps track of when you posted it and what the underlying did there. So I actually like StockTwits for that purpose. So if you go through this, you can see specifically on any given day what flow is really sticking out to me. And you can see out of an entire day, let's go to today. Where does today start? The first one today was JMIA, I believe. JMIA 641. Yeah, so this is the first one that caught my eye today that I liked. So 1, 2, 3, 4, 5, 6, 7 trades today. So out of watching the scanner the entire day, there's only 7 things that I liked from it. Now that doesn't mean there's only 7 trades you could have taken. There's a lot more stuff you can take from the scanner that might generate an income. But from what I personally like, for my trade style and for the way that I teach the scanner, there was only 7 things out of this entire day that really met the criteria that I'm going to take a trade on. Out of those 7, they're all going to, so far, looks like, generate a profit. So far, they all have, except for that one, which was down, what was it, 60 cents or 40 cents? And that one, again, it has time on it, so I'm not worried about being down 40 cents. And that's the underlying down 40 cents, not the options contract. So I'm just not worried about that one. So why does flow trading work? Why, out of all those posts that I put up there, how come most of those are successful? And if you scroll through them, you're going to see some losses on there. So it doesn't mean they're all successful, but the majority of them are. And the ones that aren't, that might show that they're at a loss right now, at some point after we posted that flow, it was at a gain. It might be at a loss now. So again, trade management is really important. You can't just follow flow and then wait till expiration to close out. That's not how this works. You do need trade management. Risk management and trade management are extremely important. But why does it work? When I post that much flow, it was only 7 today, but if you scroll through that, you'll see a bunch of posts throughout the day, any given day. So out of all that posting, how come most of that ends up being successful? Am I a genius trader? No, I've already explained I'm an idiot. You talk to people that hang out with me, I'm a goofball. I'm not a genius. I've been trading for 5 years. I know people that have been trading for 30 and 40 years. So 5 years doesn't mean I don't really have a long history of trading. 5 years is a good amount of time to be involved in anything. But again, I know people that have been trading for 40 years. So compared to them, I'm a baby in the trading world. Some people say, yep, Danny just posted that. Some people say we're just getting lucky. Well, if we have 40, 50, 60 trades posted and only 1 or 2 of them is at a loss, I would love to hear how you think that's just luck. 1 or 2 losses out of 40 trades, there's a little bit more to it than luck. If we were lucky, if you flip a coin, you would expect the odds to be about 50-50. Heads, tails, half the time you're going to get heads, half the time you're going to get tails, or pretty close to it. So out of 40 trades, maybe 20 of them would be horrible, and then you can say it's luck. We're flipping a coin, calls or puts. But out of 40 or 50 trades, if you just don't have that many losses, it's not luck. There's something to it as far as the type of trade we're looking for. And again, that's what I'm going to point out tonight. So we're going to go through a PowerPoint presentation to show you what all this data is. Then there's a Q&A session at the end. But why does flow trading work? What is this all about? What we're doing is following the big money. So what I'm looking for is an aggressive entry from the big money. Now you can look at this one here and say $210,000 into this trade. Wow, that's a big trade. $210,000 might be a lot for a single trade for you. $210,000 might be a lot for a single trade for me. But when we're talking about big money, $210,000 is not a lot of money. That's just not what I'm looking for. And if you guys go through some of the trades you might have taken based on flow that didn't work out, you're going to find a bunch of stuff like that. So let's just click randomly on IBM. That's a big name. Everyone knows IBM. Look at the dollar amounts here: 20,000, 25,000, 18,000, 10,000, 22, 162, 15. That 162,000 is a pretty decent number, right? It's really not. And when you look at the other numbers going into this, and this isn't all the same contract, I just picked on the ticker because it was in front of me. If you look at the dollar amounts here, they're just not big trades. So when I say big money, I don't mean someone putting $200,000 or $300,000 into a trade. At first, that might sound like it's a big trade, but the people we're talking about following are the people who have the ability to move the markets. These aren't traders that have $200,000 in a trade. These are traders that have millions of dollars in a trade. So when I say big money, don't think of a $200,000 trade as big. Think of someone who has hundreds of millions of dollars at their disposal. Hundreds of millions of dollars at their disposal. So if they put $25,000 into an IBM 416 contract, $25,000 to them is the equivalent of me dropping a penny out of my pocket. I look down, I wouldn't even waste the time to pick up a penny. It's not worth it to me to bend over to pick up a penny. These guys wouldn't waste their time bending over to pick up $25,000 because they have hundreds of millions. They don't even realize they spent $25,000. The intern can make an accounting error for $25,000 and these guys don't even catch it. So again, when you think of big trades, what we're looking for is multiple millions of dollars. And when you look through these posts here, not all of them are going to be multiple millions. So the dollar amount that I'm talking about is just one piece of the puzzle. But this is $1 million sweep on Netflix. This was Airbnb. Look at the numbers here: 700,000, 559,000, 2.1 million, 556,000. Those are big numbers. And when you add them up, it adds up to an even bigger amount. Square, a $1.47 million sweep. Before that was $711,000 block. So big numbers. This one, VFC, small numbers here, small here, but there's a $280,000 block, 113,000, 100,000. This isn't the best of the best that we would be looking for, but those are numbers that kind of caught my eye based on what I was looking at the time. Visa, 236,000, 172, 307, 204, 360, 325, 715. Now this is all the exact same contract. Okay, these aren't random numbers going into Visa. It's the exact same contract. These are all the same contract. They're just dumping money into this contract. So pull up Facebook or Microsoft or Tesla, and you'll see big numbers on Tesla, but you have to have really big numbers for Tesla to capture my attention. And in fact, it's below the market cap now, so the filter won't filter it out, but I had Tesla filtered out because it just doesn't capture my attention. MU, what do we like about MU? Well, here's $1 million sweep followed by 93,000, 172, 230, 99, 249, $2.42 million. That stuff is going to capture my attention. And how did those do? It ended up $1.52. I think these were up more at one point throughout the day, but it closed the day up $1.52 from the moment that I posted this flow. 416, so there's not a ton of time on these contracts. So if it's up $1.52 on a contract that expires in a month or so, you probably get a little bit of a return there. But they were up a little bit more, I think, after I posted this, and then they dipped a little bit. So the stuff we're looking for, these big money traders, look at this, 566,000 in a single trade, 635.39. I'm on the West Coast, so that's West Coast time. 635.39 is the second one, same as the first one. So within the same second, they put 566,000 into a trade and then 454,000 into a trade. So if you look through the stuff I'm looking at here, 315,000, 657,000. People will send me flow all the time and it's 20,000, 80,000, 40,000, 60,000. That's just not the type of stuff we're looking for. The type of stuff we're looking for looks like this: 300, 300, 300, 200, 300, 300, 300, all back to back. This part here, 1128, 1128, 1129, 1130. So these first ones, all of this, these first four at the bottom, that's all within 2 minutes of trading. And then at the end of the day, well, not the end of the day, it was a little bit later, 1130, and then it jumps to 1152. They hit it again and then again and again. That's the type of stuff we're looking for. The reason this works is because we're basically looking at these big money traders. Now, let's actually go back to Netflix. I think I posted that on the Netflix one. Not on that one. So this was, I think, on Twitter. I think I posted this one. Nope, Trade Talk Media for Twitter. Instead of crying about how the market is rigged, why not just follow who rig it? Netflix, right? Someone always knows before the retail traders do. Someone knows something's going on with Netflix. They dumped $1 million into Netflix contracts and then it pops moments later. So people cry all the time, oh, the market is rigged, or oh, retail traders don't have a chance. Well, just follow those who rig it if that's the case. And I can't say the market is rigged. Do these people, whoever put $1 million into Netflix, do they know something that we don't? Of course they do. So instead of crying about how unfair it is, why don't we just follow them because they have information that we don't? That's why flow trading works. That's why it's so successful. Because these guys don't put $1 million into an options contract as a YOLO. They just don't trade like that. Now, again, that doesn't mean every trade they take is going to work. But they just don't YOLO $1 million into an options contract. If they think something's going to go up and down, up and down, up and down, they'll buy common shares because they can just hold on to that as long as they need to. Options contracts will expire. So it has to move in such a way before the expiration date. So if they're putting millions of dollars into an options contract, they just don't do that and be wrong too many times. That's why this works. These are big money traders that probably do have information that we don't. So instead of crying about how the market is rigged, why don't we just follow those who rig it? We can see from the scanner. This is telling me exactly what trades are taking place on the exchange. Exactly what trades are actually being placed on the exchange. Now, the reason Black Box works so much better than the other options scanners that are out there, it's the algorithms. So every company that does an option scanner buys into the same data from the exchanges, but their scanner has to be programmed to report back to them specific types of information. And we have side-by-side comparisons with the major scanners that are out there, and they might show 4 lines of flow. They might show 14 lines of flow, and we're going to show 36. And we have side-by-side screenshots to prove this. So the algorithms for Black Box are just better than any of the other scanners out there. So what it's doing is looking for all these trades that take place on the exchange, and when it meets certain criteria, it puts it on the scanner for us. Now you can see I'm scrolling through it manually because the market is closed, but you can see how much data the scanner picks up. And guess what? We ignore almost all of it. So again, it's a very specific look to the flow that we're looking for before it captures my attention enough for me to take the trade. So I'm watching this. You scroll through, scroll through, scroll, 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 scroll. I'm just watching this all day long. And I'm just sitting back waiting. Most of it doesn't capture my attention. And then when it does capture my attention, something like this, $1 million sweep, and I even said here, I'd like to see more for that name. So I'm watching Netflix, and then when I get to a point where I'm like, okay, that's a trade I want to take, I'll jump into it. $1 million for Netflix, not as much as $1 million in, say, a Twitter or Snap. We usually want to see a little bit more for Netflix, but after this came out, you got to watch it, and it popped. Airbnb, right? These are $1 million of trades. This is a $2.1 million sweep by itself. That one's 500, that one's 500. So we're at 3.1 plus 7. All said and done, this is probably a little under $4 million. $4 million going into this options contract. They just don't do that hoping it works out. They do that with a very specific trade thesis. All we're doing is following them into the exact same trade. That's how easy flow trading is. I don't have any clue what I'm going to trade in the morning. I have zero pre-market and zero post-market routine these days. I used to spend hours looking through charts after the market closed. Hours. Now I have zero screen time after the market closes. I have zero screen time before the market closes. Now that doesn't mean you have to do that. That's just how I personally trade. I'm comfortable trading this way. I trust the flow and I know what I'm looking for. So I don't have to do any research because the flow is going to tell me exactly what I should be trading. Some people don't have the comfort level of doing that. They want the charts, they want the research. So when we see the right flow, the reason I don't do any research is because the flow itself will tell me what to trade. When we see the right flow, I don't look at the chart to get into the trade. I just go right into the trade. And that's kind of scary to some people. And if you look at not Trade Talk Media, but if you look through 7-Star Mike on social, I post a lot of charts. Recently I haven't, but I'll post something like this where I'm looking at charts. And now I'm going to tell you when I see the right flow, I don't even look at a chart to get into a trade. The key word there is the right flow. If I'm looking at okay flow, but it's not great, I'm looking at a chart to see what's going on. So when I say the right flow, that's the key. And again, if you look at Trade Talk Media on Stock Twits, I'm not posting a whole lot. I posted 7 times today. Out of all this flow, only 7 situations caught my attention. So I'm looking for a very specific type of trade. And when I see what I'm looking for, I don't have to look at a chart to get into it. I don't have to look at the IV of the contracts. I don't have to look up news on why it might be moving. I just immediately get into the trade. When it meets the criteria I'm looking for, I'm in the trade. No research required. And that freaks out a lot of people because they're like, well, no, you got to look at a chart to make sure you're getting in at the right spot. How do you know if it's a good entry? How do I know it's a good entry? Because the scanner is real time. If you see this 12:59.56, this trade was placed at 12:59.56. It's real time scanner. So if someone decides right here, right now, I'm going to dump $3 million into an options contract, whatever the chart looked like didn't stop them from exposing $3 million of their money to the market. Whatever the IV of the contract was, whatever the news of that ticker was, it didn't stop them from right now, right this second, dumping $3 million into that contract. So the news and the IV and the chart, none of that matters to me either. If they're comfortable putting $3 million into the market in a very specific manner, if it's the right type of flow that I'm going to follow, if they're comfortable putting $3 million into the market, I'm comfortable putting $3,000 into the market. I'm just following exactly what they do. And if anyone wants to cry that I'm just getting lucky or it's irresponsible to not look at a chart, all I would say was look at the track record. If you look through these posts, you can click on every single one of them. They're all so far generating a profit or they're flat. Now, if you go back, let's just scroll back a long ways. This one was from 3.4. This one's up $6.30. Bad example. NUAN up 259. Bad example. Snow. There we go. So this one's down $29 since I posted this flow. So you can see it's not all going to work out. Now, this one might have been up before it went down. This was posted on 3.4, so it might have generated a little bit of a profit before it dropped. It might have generated a lot before it dropped. But this one's currently down. So if you just buy a contract, this expires 4/16, and just sit in it till expiration, you're not going to do well. You do need to manage these trades. So you can see some of what I post will end up not working out. You've got to manage these trades. UAL down 51 cents since this post. And these are going back to the beginning of the month. I'm just kind of randomly picking on a few. Up $9. So if you have a trade that's up $9 and you're in an options contract, that's going to cover the ones that are down $3 or $2. This one's down $1.08. So if you took this trade and the Facebook trade that's right above it, you're down on this one, but you're up much more on this one. So in the long run, if you know what flow to follow, you guys will be successful flow traders. You will be successful. I'm telling you guys, if you understand the right type of flow to follow, you will be a successful trader. So I'm going to run through a PowerPoint presentation right now, which is going to explain what the data is even telling us. And then we're going to do a Q&A session where you can ask some specific questions if I go too fast. Or maybe you heard something in the trading day that you want covered. But I'm pretty much guessing that if you have a question, I'm going to cover it in this presentation. The presentation has been refined over the years. It's old at this point. You'll see some of the graphics are pretty old, but the stuff that I answer in this is going to cover most of the questions you guys have. Okay, so we're up and running here. Okay, so the first thing I want to point out is in the bottom there in red. The reason it's red is because it's important. Those who find success are the ones willing to put in effort into preparing and learning this platform. I can't tell you how many DMs I get on a daily basis of people that have been with us for 4 months, and they send me flow and they're like, so what do you think of this? How come no one's talking about it? And then I go pull up the flow and it's the worst, crappiest crap I've ever seen. And I'm like, dude, I know your screen name. You've been here for a long time. How are you asking this question? And people just don't want to put in the effort to learn how to use the scanner. Every single day, the number of questions I get from crappy flow is just staggering. And it's telling me that people just don't want to take this class. It's 2 hours long. That's a pain in the ass. If you don't have 2 hours to learn about the scanner you're using, I don't have any sympathy for you if you're not making money. And it's a passion of mine to stop people from losing money. We have such an easy system. So if you don't get everything tonight, that's fine. Take the class 2 or 3 times. Take the live trading seminars with Charlie and Maria. Everything I say tonight, if you listen to Charlie and Maria's live trading seminars, you're going to hear the exact same thing from Charlie. Maria trades on flow, but she also trades on charts as well. But if you hear Charlie talk, you won't hear Charlie say something that I don't say. You won't hear me say something that Charlie doesn't say. And again, it makes sense because I learned flow trading from him. But we're almost identical in the way we trade flow. It's almost identical. The number of trades that we're in at the same time with pretty much the same entry, it's unbelievable that we'll message each other and be like, hey, I just wanted to make sure you saw this. And the other person, whoever messaged the other one, the other person's already in the same trade because we're looking for the exact same thing. People will send me flow that's just garbage and they don't want to put in the effort to learning how to use the system. If you do, and if you don't get it tonight, again, there's a lot of information, that's fine. But if you put in the effort to learning the system, go through those Twitter posts and the StockTwit posts, you're going to see trade after trade that just works out. I'm telling you guys, you will be profitable. Just put in some effort to understanding what we're doing here. Important notes. In the middle of that screen there, it says Blackbox isn't creating trade information. It's just reporting trades that other people have placed. So what that means is that there's no one in the black box office telling us we should take Netflix and we should take this contract. No one's creating any kind of trade information. All the scanner is doing is telling us that this trade executed on the exchange right now. And it pops up on the scanner. So what we need to do is look through all of that, all these trades that other people are placing, we need to look through those and find the criteria that we're looking for. We have to find that very specific look to the flow, and then all we're going to do is follow it. So no one's creating any kind of a strategy. We're just literally watching what other traders are doing as they actually do it. And when we find what we're looking for, we just follow them into the trade. Well, what ticker do you trade? Whatever the flow tells me. Well, what contract do you buy? Exactly what the flow tells me. There's no question in my mind. The only thing I have to figure out is how many contracts do I want? I'm trading exactly what the flow tells me to trade. The only decision I make is how many contracts of it do I want. So what I need you guys to do is get to a point where the only thing you have to figure out is this good flow or is it bad flow? And if it's good flow, you just take the trade. If you find that good flow, you just take the trade. There's no thought process. There's no chart. There's no IV. There's no, well, what's the news? I really need to research and find out why they would put $3 million into this contract. I don't care why. If they put $3 million in a contract, I'm going to follow them. And it's not just 3 million. So a lot of people ask all the time, well, what's the dollar amount that you're looking for? There's no answer to that. The dollar amount is just one piece of the puzzle. I might follow $800,000 of flow and I might ignore $14 million of flow. The dollar amount is just one piece of the puzzle. So what you guys need to do is learn all the pieces of the puzzle, learn how they fit together, and then you need a critical thinking component to be able to dissect that information. But it's really not hard if you put in the time to learn the scanner. It really isn't hard. I'm going to give you guys a checklist at the end of this that basically covers what are the different pieces of the puzzle. How fast is the scanner? It's real time. I'm on the West Coast, so when you see 6:30 in the morning, there's no pre-market options. That is right when the bell rings. I'm on the West Coast, so 6:30 is 9:30 East Coast. Up at the top here, this is 6:30:01. So all of this from this graphic that you see here, all of this happened within 1 second of the market opening, and it appeared on the scanner within 1 second of the market opening. So again, when we place trades based on the scanner, that's why I don't have to look at a chart. That's why I don't have to look up news, because when it's on the scanner, it just filled for whatever trader placed that trade. So if we see them put $4 million into a contract, it just happened. So I'm going to follow them as quickly as I can get into that contract. And again, don't use that $4 million mark as the reason I'm getting into a trade. There's a lot of pieces of the puzzle. But if I see the right look for flow, it just happened if it's on the scanner. There's no delay. So I don't have to delay my thinking to follow them into that trade. Let's take a look at the information that's presented to us. It seems like a lot, and it is a lot, but it becomes so second nature after you put in some time with the scanner that it's really not a lot. At first it is, because you have to figure out what it's all telling us. But after a while, when you understand how to use the scanner, you just glance at this and you know exactly, I want to follow that, or I'm going to completely discard that. But at first, we got to figure out what it's telling us. So let's go through the line. 12:51:07, that's the time the trade took place. Because it's real time, that's the time the trade shows up on our scanner. XLK is the ticker they're trading. 8/23/19 is the expiration date. 79.5 is the strike price. This section is going to say call or put. 79.31, if you look up top on the scanner, it's going to say details, and this will say spot. So 79.31 is the spot price of the underlying at the time this trade took place. So when this says 79.31, that means XLK, when they placed this trade, was trading at 79.31, and they bought a 79.50 call. So with the spot price, I can tell if it's in the money, at the money, or out of the money without taking my eyes off the scanner. So this was trading at 79.31. They bought a 79.50 call. That's 19 cents out of the money, which we can basically say it's at the money. So that's the spot price of the underlying at the time the trade took place. This section is important, and I have a quiz question coming up, so pay attention to this section right here. This is telling me 556 contracts traded. 0.661 was what they paid for each of those contracts, and AA means above the ask. So they bought 556 contracts for 0.661 each, and 0.661 at the time this filled was above the ask. This section will say sweep or block. Sweeps and blocks are both large institutional orders. The difference is a block is filled on a single exchange. A sweep is filled across multiple exchanges. So to make that practical information, if I want 1,000 contracts and I tell my broker, I want 1,000 contracts, but I'm only willing to pay $4 per contract. The broker's going to go out and see if they can find 1,000 contracts available for $4. If they do, they're going to buy those for me. If they don't find those, they won't fill the order. A sweep is basically me telling the broker, I want 1,000 contracts. So the broker goes out to the exchange, there's only 300 available. They're going to grab those 300 for me, but I want 1,000. So they're going to go to another exchange and look for 700 more. Let's just say they only find 400 more. They're going to grab those for me. So I now have 700, but I told them I want 1,000. So they're going to go to another exchange looking for 300 more contracts available. When they find those, they're going to buy them and add them to my position until I get the desired 1,000 contracts that I was looking for. So sweeps are more urgent, which is why we follow those preferably over blocks. A sweep is basically saying, I want 1,000 contracts. If one exchange doesn't have them, grab whatever they have, but go to as many exchanges as you need to until you fill this order. A block is more like a limit. They're not limits versus market. So I don't like using that analogy sometimes, but it's more like a limit where I say, I want 1,000 contracts at $4. So if they can't go out and find 1,000 contracts at $4, they won't fill the trade. That's why a sweep is more urgent. And one of the things we talk about, size, time, and urgency. Urgency is one of the big three things we look for: size, time, urgency. So sweeps are more important. Now, we don't ignore blocks. People will take this seminar and then they'll go back to the chat room and say, oh, we don't look at blocks. No, that's not correct. We do look at blocks. What we don't look at is a solo block. Meaning, if you pull up this line of flow right here, and the only line of flow for this happens to say block right here, we are going to ignore that 100% of the time. Now, one of the things I'm also going to say is we look for large money, right? You heard me say before, we look for multiple millions. So if you pull up this line of flow and there's only one line on it and it happens to be a block and it's $40 million, we're going to ignore it. We ignore solo blocks. Every single day in the chat room, you can look in it and someone's going to post a single line of flow that's a block, and they're going to say, this is $7 million. How come no one's talking about this? If it's a single line of flow that happens to be a block, we ignore it 100% of the time. So when I say multiple millions is just one piece of the puzzle, if it's a solo block, the multiple millions part now no longer matters. It can be $60 million. If it's a solo block, I'm not following it. So then some people will say, well, you follow $2 million. Why would you ignore 60 million? If it's a solo block, we ignore that 100% of the time. You never have to post a solo block, regardless of how big the trade is, and ask us what we think. I do not trade any different when I'm trading than how I'm teaching you guys tonight. I don't trade any different. You'll never see me in a trade that was based on a solo block. Never. We ignore solo blocks. Now, if you have sweep, 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 block, block, sweep, 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 those blocks are important pieces of the puzzle. We need that information. If you pull up a line of flow and it's just one line of flow and that's a block, we ignore it. If there's blocks mixed in with sweeps, we don't ignore those. There are times you'll see a small sweep, small sweep, small sweep, big block. We will follow that. But again, it has to be the right combination of flow. 36.7, that's the amount they put into or take out of this trade. And 26 is the IV of the contract. The IV, if you're a flow trader, you can 100% ignore that number. We don't care what the IV of a contract is. Who can tell me why? What if the IV is really high? Why don't I care? Someone has to answer this correctly because I've already said it in this very seminar. Daniel, yes, if the big money was willing to go in, we are too. So if the IV of the contract is high, but they're still putting $18 million into the trade, it wasn't high enough for them to say, well, whoa, let's hold on. Let's put our 18 million into it, but let's wait for the IV to come down. Right? So the IV wasn't high enough to stop them from putting on their multiple $1 million trade. It's not something that I need to concern myself with a few $1,000s. And some people, again, are uncomfortable with that. The more you trade flow, you'll get to the point where you trust it enough and you'll trust that you're following the right flow, that you just don't care about the chart. You just don't care about news. You just don't care about IV. The person making that $1 million trade already took care of that for us. We're just following them into their trade thesis. There's really two pieces of data that I'm focused on. The first thing I notice is the color. There's only 3 colors, so it's pretty easy to remember: white, yellow, purple. And the colors are basically telling me where in relation to open interest are these trades taking place. That's all the color is telling us, is where in relation to open interest is this particular trade. White just means that the open interest has not been met on that contract. Yellow means the open interest was exceeded in that one single trade. And purple means the open interest has been exceeded, but it wasn't that one single trade that did it. So white, the open interest hasn't been met. Yellow, it's been met with that one trade. Purple, it was met, but it wasn't that one trade that did it. It was a combination of trades before that that exceeded the open interest. Are there any questions on the colors? It seems pretty simple, pretty straightforward. I've got 2 quiz questions for you if there are no questions on the colors. Remember, the open interest is specific to each individual contract. So this one, this Apple right here, this 823-212.50, the open interest on this is going to be different than the open interest on the 823-215 call. So I have 2 questions for you guys as far as color. Let's use this purple line of flow right here, this Apple line. This came across the scanner this particular day in purple. If I see flow on this particular contract for the rest of this particular day, remember, OI will change every day. So tomorrow morning, this will start back at 0. So the day that I took the screenshot, this contract showed up purple. If we see flow for this contract for the rest of that day, can it be white? Can it be yellow? Can it be purple? Tell me what colors it can be after I've already seen this one come through purple. There's a few correct answers. There's a few incorrect. So let's go through it again. This one's purple. So what does that mean? That means that the open interest on this contract has been exceeded. So can we see white? Well, white means the open interest hasn't been exceeded. So once you see purple, you can't see white flow for the rest of the day. So once you see purple, the rest of the day, you will not see that contract show up as white. Can you see more purple? Well, purple means the open interest has been exceeded. So if they trade that contract again, yes, it would be purple because the open interest on the next one would already have been exceeded with the first one, so the next one would also be purple. But can it be yellow? Yellow means open interest has been exceeded in a single trade. So in this case, the open interest was exceeded already. If there's another large trade that comes in and exceeds the open interest in the single trade, it would show up as yellow. Because the yellow is telling me it's already exceeding the open interest by itself. The purple tells me open interest has been exceeded already, but the yellow is telling me it's been exceeded in a single trade. So even though it's already been exceeded, if we get that one big trade that exceeds the open interest, it would show up as yellow. Now, if we get another trade after that, that doesn't exceed the open interest, it would go back to purple because the open interest overall has been exceeded, but it wasn't that single trade. That wasn't enough to do it again, so the next trades would be purple. So once you see yellow or purple, you will see more yellow and purple. You will not see white flow. So then people ask, well, why don't we filter out the white flow? You don't want to do that. The white flow is part of the story. It's part of the puzzle. You have to see the whole puzzle. So people ask me about the filters all the time, and I hate the filters. Remind me in the Q&A part, I can go through the filters, but people start filtering out the information and it drives me nuts because you're not seeing the entire picture. And every time I post flow, someone's going to post up and say, hey, my flow doesn't look like that. How did you get that $2 million block trade on there? I don't see that particular trade. And it's always because you guys are messing with the filters. Do not filter the information. Now, Charlie will tell you otherwise. Charlie will say, yes, filter the information to make it more simple. So it depends on where you are with your experience in trading. If you're experienced with the scanner, I prefer not to filter the information. Charlie will tell you to filter it a certain way. I will tell you not to filter it. So you have to figure out what works best for you. But the more you filter the information, the less you're going to see. So remind me in the Q&A session, I'll talk about my filters and Charlie's filters and how that's the way Charlie and I trade differently. We'll still be in the same trades, but we'll filter the scanner differently. So remind me in the Q&A session, someone asked me about filters. Now here's my other quiz question for the colors. This SPWR contract is yellow. This contract is yellow. What was the open interest on this contract the day I took that screenshot? What could the open interest have been on that contract? If you listen to the last screen where I went through the details column, that's going to give you the clue as to how I know what the open interest would be. And I'll give you a hint, we don't necessarily know the exact number. But there's information there that tells me what the open interest could be. Who can tell me what the open interest would be? So let's go through the answers again, right? It's yellow. What does yellow mean? Yellow means open interest has been exceeded in a single trade. So we know that the number of contracts in this particular trade is greater than the open interest. How many contracts were traded in this particular trade? Well, you have to look at the previous slide where I went through the details. This is telling me 151 contracts were traded in this particular trade. 151 contracts were traded in this particular trade. It's yellow. That means 151 exceeded the open interest in this particular trade. The open interest is 150 or less. How do I know that? Well, 151 exceeded the number. So the number has to be 150 or less. I don't know if it's 150 or if it's 12 or if it's 76. We would have to look at the options chain for that. But because this is 151 and because it's yellow, I know that the open interest is 150 or less because 151 exceeded the open interest in a single trade. So those are the types of things we're looking for with the color. The yellows and the purples are telling me that there's been repeated activity in that contract that brought us above the open interest, which tells me relative to the number of contracts that are open, this contract is trading more than that, which is a good sign. There's liquidity there. Now, that in and of itself doesn't tell you all that you need to know to get into a trade. So someone's going to ask, well, we want to follow the yellow trades, right? We want to follow the purple trades, right? The color is just one piece of the puzzle. We're not following a trade because it's yellow or because it's purple. In fact, I have followed trades that have been strictly white flow. So the colors are just one piece of the puzzle. The next thing, and this is the most important part to me, is the spread. Now, before I get into this one, I'm going to ask you guys a question. Help me out with this one. If I'm going to do a market order to open a position, will I get filled on the bid or on the ask? I'm going to do a market order to open a position. Will I get filled on the bid or the ask? The screen is lit up with ask, and you guys are correct. So if I do a market order to open a position, I'm going to get filled on the ask. Now, if it's a market order, so I might not get filled on the actual ask, but you guys understood what I'm asking for. It's going to get filled on the ask side. So if the spread is $1 by $1.20, I might get filled at $1.18, $1.17, but it's going to be on the ask side. So this part here, this is telling me where in the spread these trades are filling. There's 5 options. This one I think is a little hard to see for you guys because I have it highlighted. There's nothing here. So this one says 225 contracts at 0.954, and then it's blank. That means that it filled between the bid and the ask. If there's a BB, that means it filled below the bid. If there's a B, that means that whatever the price filled, like this case, this filled at 86 cents. 86 cents was the bid. This one, A, means ask, and AA means above the ask. So when you see 55 cents A, the 55 is the ask. So how do we know if these are opening or closing positions? Well, you guys just told me that if I'm going to do a market order to open a position, I'm going to get filled on the ask. So when you see this trade here, 55 cents on the ask, that's an opening position because it's filled on the ask. How many times can you guys close a position and get filled on the ask? It could happen, and it does happen, but it's not the norm. So everything I say tonight, there's a rule and there's an exception. And this part here, there's exceptions to this part that confuse the crap out of people. The more time you put in, the more experience you have with the scanner, you'll know when it's the rule and when it's the exception. So there's some exceptions here. If you fill ask side, you're opening a position. There are exceptions to that. You can be closing a position and still filled on the ask, but that's not the norm. That would be the exception. Way more often than that, if you see ask side flow, it's an opening transaction. How do we know when it's the rule, when it's the exception? If you see ask, bid, ask, that one bid side transaction isn't someone closing. The spread might have been jumping quickly. So if you see ask, bid, ask, they're not buying, quickly closing, and then buying the same contract again. So we have clues like that to let us know whether it's the rule or the exception. This trips up a lot of people because they'll see bid side flow and they'll go, oh my God, they're closing those out. We should close our trade, right? And the answer is no. A lot of times you'll see bid side flow mixed in with the ask side. They're not closing the trade out. So again, you need some experience to be able to say, this is bid side closing versus this is bid side, but it's the exception. They're actually opening this position even though they're filling on the bid. Experience will tell you when it's the rule, when it's the exception. We can't teach you seat time. The more time you have with the scanner, the easier it becomes to determine whether the bid side flow is the rule, where they're closing those contracts, or if it's the exception and they're actually still buying even though it's filling on the bid. So what is above the ask? Why would you pay more for a contract than the ask? Below bid, why would you get less for the contract than the bid? Who can tell me why the AA and the BB are important? Shanta, you got it. Dustin, perfect. Keith, yep. Urgency. Above the ask, urgency. You're urgently trying to get in that position. Below the bid, urgency. You're urgently trying to get out of a position. So if the spread is $1 by $1.10, why would I pay $1.15? Because I don't care what it costs to get into this trade, get me into this trade. The spread is $1 by $1.10. I don't care if I'm paying $1.15. Why? The dollar amount isn't important. What's important is that I get filled on this position and get filled right away. I don't care what it costs. I care that I get in this position as quickly as possible. So when you see above ask, that is urgent. When you see below bid, that's urgent also, but that's them urgently trying to get out of a position. So AA and BB are showing us urgency. Ask and bid are showing us that as well. If you get filled on the ask, it's likely you could have done a market order and just got filled on the ask. Instead of doing a limit order where the spread is $1 by $1.30 and you want to make sure you get $1.15, you want that mark, so you're going to do a limit order. If you just get filled at $1.30, that's urgent because you're just saying, you know what, I just want the position, I'm going to do a market. I don't care if I get filled at the high end of the range. So you've got to pay attention to the A, AA, B, and BB. That's telling us whether these are opening or closing positions. If someone that has a lot of money is closing a position, the probability of making money if you open that position is pretty low, right? There's a big money trader out there and they're closing out of their position. Why would you want to open that position? There's a reason they're closing theirs, that you don't want to run into that position if someone else is closing out of it. It can make money, of course, but the probability is low. So you guys want to pay attention to the AA, A, B, and BB, because that's telling us a little clue about the urgency with which they're opening and closing. Any questions on the spread? I don't see any questions coming in now. So I'm going to move along. If there's questions on the spread, get the Q&A session. Just remind me in the Q&A session, we can go over something as well. I do have a few slides that'll kind of cover something else about the spread. So it might get to your question there. Now you guys want to know, great, I know what the colors mean. I know if they're opening or closing. But how do we use this information? It's great that we know what it means, but how do we use it to actually make money? There's a few things we're looking for. You'll hear Charlie say this too, so it's not me just kind of bashing the scanner. We're not bashing the scanner. But you're going to hear both of us say that the majority of the scanner is garbage. It's mixed flow. What you see on the screen there, there's Gilead, there's Oracle, there's Twitter, there's calls, there's puts, there's ask side, there's bid side. There's contracts that look like they expire soon. There's contracts that look like they expire the next month. So what you see on the scanner there is just completely mixed flow, and we're not going to really look at any of that. We're looking for a very specific set of criteria. Most of the scanner is just mixed information, and we're going to ignore that. Now, what do you see on the screen that sticks out? Is there anything that you would place a trade on here? And this is a perfect example of when I talk about pieces of the puzzle. Is there anything in that graphic that you're going to place a trade on? There's two answers that I get. One answer is no, one answer is Twitter. And there's people, you guys can't see the answer questions on, or the answers on here, but there's people that are answering both of those. Some people say no, some people say Twitter. So here's a perfect example of pieces of the puzzle. Twitter stands out for sure. It's yellow. Yellow means that the open interest was exceeded in a single trade. That is awesome. So we have one good piece of the puzzle. We have above the ask. Above the ask is urgency. That's awesome. That's two good pieces of the puzzle. We have a sweep. That is awesome. We now have three good pieces of the puzzle. Open interest was exceeded in a single trade. It was above the ask, and it was a sweep. That's three good pieces of the puzzle, and I'm still not going to follow that trade. The fourth piece of the puzzle is the dollar amount, $26,000. So even though it's yellow, even though it's above the ask, even though it's sweep, in this case, it's the dollar amount that keeps me out of this trade. So you can see in this case, there's four pieces of the puzzle. Three of them are good. The one that isn't good overrides the three that are good. The dollar amount, $26,000, I'm just not following that under any circumstances whatsoever. So you can say, we like yellow above ask sweeps, right? We should get into this Twitter. No, the dollar amount does absolutely nothing. If I see that on the scanner, it's not even going to capture my attention. Yes, we like yellow. Yes, we like above ask. Yes, we like sweep. $26,000 just doesn't do it to us. And that's most of the scanner. You see a lot of stuff like this that just comes through the scanner, and we're just watching all of it. We're waiting. We're patiently sitting down, watching, waiting. And when the right criteria hits, we're going to attack those contracts. Okay, so again, you have to know every single piece of the puzzle. You can have a good piece of the puzzle and act upon that. And in another example, that same criteria might be what keeps us out of the trade. So all of the pieces of the puzzle have to come together, and then you need that critical thinking component to really dictate, this is a trade I'm going to take, or no, like in this case here, there's three good pieces of the puzzle, but I'm still not going to take that trade. And again, I have a checklist coming up that's going to give you all the individual pieces of the puzzle. ETFs, I'm not going to spend too much time on this slide other than to say take ETFs off your screen. And by default, you do not see them anyway. If you're an experienced trader and you trade SPY or Qs religiously, go ahead and throw ETFs on the screen. You can certainly use that information. 80% of you guys said you're not making money in the stock market. So leave ETFs off your screen. Now remember, everything I say tonight, there's someone that's going to say, well, I do it differently. There's not one way to use Black Box. I'm teaching you guys the easiest, most foolproof way to get profitable as a trader. ETFs, do not look at them. They will not help you. And you can see someone in the chat room will post ETF flow or say something about SPY or Qs. Yes, you can use that information to make money. If you're not a consistently profitable trader, just take it off your screen. It won't help you. ETFs are often used as a hedge. So if you see a bunch of SPY puts or Q puts, that doesn't mean someone thinks the SPY or Q are going to drop. It could just be a hedge against their $60 million portfolio. So you see $3 million of Q puts and you go, oh my God, we should get Q puts. If they're buying puts on QQQ for $3 million, $3 million isn't a lot of money for the Qs. $3 million in Twitter is a lot. $3 million for the SPY and the Qs, not a lot. And the other thing is, it might not be their trade. It might be insurance against their portfolio. So if it goes to zero, they're okay with that. So just take ETFs off the screen. Bearish call activity. Bearish call activity. If you're new to trading options, this might be confusing. The first line I say that in the graphic there, wait, I thought calls were bullish. Yes, well, maybe. So calls are bullish. Calls are a bullish instrument, but there's two things I can do with them that would mean I actually have a bearish sentiment. The first thing is easy to understand. Let's say I have 100 contracts of, let's just use the example on the screen there, the snap calls. I have 100 snap calls and I close out 25 of them. And then I close out 25 more. And then I close out 25 more. And then I close my last 25. Am I bullish or bearish? I had 100 snap calls and I started closing those calls out. Do you think I have a bullish or bearish sentiment? Everyone is answering correct, bearish. Right? If I was bullish on it, why would I close the position? If I was bullish, I would keep it open and make even more money. So I am bearish. Now, you're going to see calls on the screen. We don't get this question too often anymore, but a while back, people were asking, well, if it's bearish, how come they're not puts? Well, they're not puts because they're actual call contracts. Someone has call contracts and they're closing them out. So the scanner won't say puts because they're not puts, they're calls. So they're call contracts, someone's closing them. How do you know? You've got to look at this. They're filled on the bid. So calls coming in bid side is a bearish sentiment. So if you see snap, call, snap, call, snap, call, snap, call, and you rush in to open this snap call, can you make money? Yes, of course. Is there a high probability that you'll make money? No. Because if these were such a good position to hold, why would the big money be closing out of them? If they were going to make more money on them, they wouldn't close them, they'd hold them for further gains. So either they made money on it and they're comfortable with their profit level, they're closing them out, or maybe they took a loss on it, they just don't want the position anymore, they're closing it. So if you open that position, you're actually buying what the big money is dumping out of. And yes, that can make money, but the probability is that it won't, or if it does, it just won't make a whole lot. Because if that position had a lot of upside to it, the big money wouldn't be closing them out. So when you see calls, if you don't pay attention to the spread, you might be opening this position that the big money is actually closing out of. So you have to pay attention to the spread. For you advanced traders, you'll understand this. If you're new to options, this will just confuse you, so close your ears for 30 seconds. For the advanced traders, if I'm writing a call position, I'm bearish, right? If I'm writing a call position, I am bearish. So if I'm writing a call position, that means I want the person buying those calls from me to lose money. The person buying those calls will lose money if the underlying drops in value. So if I'm writing a call position, that is a bearish sentiment for me. If I'm writing a call position, what would it look like on the scanner? It would look like calls, because that's what I'm actually using, but I would be filled on the bid side. If I'm writing a position, I'm going to get filled on the bid. And again, it doesn't have to be exactly the bid, right? You can do $1 by $1.20, and I might get filled at $1.05, $1.07. It doesn't have to be the dollar, but it's not going to be $1.20. It's going to be on the bid side. So if you see something filled on the bid, if I'm writing a position, that's what it's going to look like. So if I'm writing calls, it will say call, but they will fill on the bid. So there's two ways calls on the scanner can show bearish. If I'm in a position and I'm closing it out, I have a bearish sentiment. If I'm writing a call position, I have a bearish sentiment. Which of the two is it? We don't always know. Sometimes we do, sometimes we don't. But the good news is it doesn't matter because it's going to look the same on the scanner. It's going to say calls and it's going to say bid side. So whether this is someone writing a call position or they're just closing out a position they already have, sometimes we know, sometimes we don't, but it doesn't matter because both scenarios are bearish. And the opposite is true for puts. We can have a bullish put scenario. If I'm closing a put position, I'm now switching to a bullish stance. Or if I'm writing a put position, I have a bullish stance. How would that look on the scanner? It's going to say puts because that's the contract I'm using, but they're going to fill bid side. Is that clear to everyone, or did I confuse a few of you? Nothing coming in. So again, if there's any questions, we can go to the Q&A session and clear that up for you again. Now your default settings, they don't look like this anymore because Blackbox loves you guys and they expand the program pretty often. So you have a bunch more filters than what looks like on the screen right now. By default though, you can see that above ask and at or above ask, these highlighted ones, those are checked by default. So that means you won't see bearish calls or bullish puts. So you're going to see calls that are bullish, puts that are bearish only. So by default, if you want to see when they're closing a position or when they're writing a position, you have to go to this filter button and uncheck these two options. By default, they're checked. If you want to see calls that are bearish, which is either someone closing a position or writing a position, you have to uncheck those two. There's currently no save settings button. So every morning when you open Blackbox, you have to go to your filter section and uncheck those every morning. This one I want to point out. This one is when we know the buyer's exiting the position. Now, this was a trade we actually took. This was in 2019. So these slides, like I said, they're pretty old at this point, but the information is still perfectly valid. This was a Friday. 5/31 was a Friday. We saw them hit the Macy's 621 20.5 calls over and over. This isn't all the flow we saw. This is just enough to be able to show the graphic in one reasonably sized picture. But these were coming in at 43 cents, 44 cents, 45 cents. Ask, ask, above ask. These three are blank, and then ask, ask, ask. So we saw a lot of ask side activity on 5/31 for this contract. 6/3 is Monday. So 5/31 was Friday, 6/3 was a Monday. What did we see? The same Macy's 621 20.5 calls. We saw 621 20.5, Monday 621 20.5. So the same contracts we saw coming in down here, we saw them coming in Monday. But look what happens. Friday, their ask side. Monday, their bid side. That's when we know the buyer is exiting the position. It's ask side down here. The next time we see a bunch of contracts fill the screen, they're coming in bid side. So the buyer that opened these positions here is now closing them out up here. Is there a good reason they closed them? Well, they were paying 43 cents and 44 cents on Friday. Monday, 88 cents. So over the weekend, they doubled their money. So that's a good reason why they would close those positions out. Now, when we see the buyer exiting the position, it doesn't mean we have to close ours. We want to know when they're exiting. Doesn't mean we have to follow them. Same as when you take a moderator trade. That is your trade. So you do not wait for the moderator to tell you when to exit the trade. We don't wait for the buyer on flow to tell us when to exit the trade. Now, we do have a rule for when the trade goes against us. When the trade goes against us, the rule states if the big money is still in the trade, we stay in it with them. The people who abuse that rule take losses on trades that go on to make 100%, 200%, 400% gains. All those hashtag 20 trades that I showed you guys earlier, there are people in our group that took losses on those trades. My personal trading did not have a single loss on any of those. What was the difference? The difference was when those turned against me, I did not close the position. Other people freaked out because they either had too big of a size or they were uncomfortable with holding a 30% loss, so they closed it. My rule is if the big money stays in the trade, I stay in it with them. And every single one of those that was down turned around and made nice profits for us. So that's just a rule that I have. You'll hear Charlie say all the time, I will not leave my wingman, right? The wingman is the flow. If the flow got us into a trade and it's turning against us, as long as the big money stays in it, we stay in it with them. We do not leave the wingman. Every time he's left the wingman and closed the position, it turned around and made a profit on him. And he's like, oh, I should have held those. I left my wingman. I shouldn't have closed that position. So every time he's done that for a loss, those contracts turned around and made a nice gain. So my personal rule and Charlie's rule now, if the big money is still in the trade, we stay in it with them. Now, if they're profitable positions, then we just exit whenever. So I'm going to look at a chart and look for resistance. And when I see that it's having a tough time getting above a resistance, I'm going to close it. Charlie and Mari have a rule. If you like the trade, just click sell, right? If you're happy with your profits, just click sell. So if you're up $400 on a contract that, maybe it's a $600 contract and you're up $400, if you're happy with that, close it out. For me, I like to use support and resistance and price action to see where are we seeing some resistance that it looks like it just can't get above that level. That's where I'm going to close those out. I'm also closing out into gap ups. So if we have a gap up and I'm in a position, I'm probably closing out into that gap up. So where do you exit? Completely dependent on your trade style. We're not all going to get the same results because some people might close out in 2 or 3 days. Some people might hold it 2 or 3 weeks. So your results are going to change depending on your trade style. So then people ask all the time, well, are these swings or are these day trades? It just depends. I've had contracts that expired 4 months out and they did such a good job the day I got it that I made it a day trade. Even though they're still 4 months out, I closed them out for a day trade. I've had other positions that I've let run for a week or 2 weeks, and they might have 2 more months after that, but I'm not waiting 2 more months. I'm closing it out when I see fit. My account does not affect you. Your account doesn't affect me. So if I close out a trade and you're like, oh, I think I want to hold on to it longer, hold on to it longer. If you want to close out a trade and you don't see me closing out a trade, you don't have to say, oh my God, I really want to close this, but Mike's not closing his, so I'm going to stay in mine. If you like your trade and you want to close it out, close it out. Do not wait for other people. But when the trade goes against us, we have that rule that says if the big money is still in it, we stay in it with them. Now I've got one more graphic for you guys, and then it's Q&A time. Hang in there, we're almost done. I know this is a long seminar. But if you really understand everything I talked about tonight, you have all the tools that I have to make the same trades I have. It's second nature to me just because I've been doing it for long enough now, and I teach the flow class, so obviously I'm comfortable deciphering the flow. But you guys will get to that point. So here's your checklist. Here's what I'm looking for. Time frame. Short time frame or continuously pounded all day long. You'll hear Charlie say ground and pound. So when we see boom, 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 your screen is just lighting up with one specific contract. That's usually a good sign. Do we follow that? No, that's just one piece of the puzzle. Same strike, same expiration. That is extremely important. We'll see someone get into XYZ $50 call, $70 call, $40 call, $65 call. That's not what we're looking for because the person that's doing all those trades isn't specific about what they're trading. I want to see that XYZ hit $50 call, $50 call, $50 call, $50 call, $50 call. If it's not the same strike, same expiration, it's not something I'm going to get into. Contract price increasing, this one's important. A bunch of times people will post 14 lines of flow, and all 14 times the contract price is $1.20, $1.20, $1.20, $1.20, $1.20. It never changes. I am not following that flow. Now, that doesn't mean the trade won't work out. That trade can double or triple, who knows? If I could see the future, we wouldn't have to do this class here. So if the contract price doesn't increase, that doesn't mean the trade won't work out. It's a major red flag to me. I am not following that trade if there's 14 lines of flow and every single time the contract price didn't change a penny. I am not following that flow. It doesn't mean it won't work out. It just means it's not the trade for me. It's not that super high probability criteria we're looking for. And you got to ask yourself, if they're buying 6,000 contracts and the price didn't move a penny, if you're in that trade, you got to ask yourself, what would it take to move that? Do they have to buy 20,000 more just to get 5 cents out of the contract? They're buying all these contracts and they're not able to move the price up. That's a red flag. Again, it doesn't mean the trade won't work out. It just means if you post flow like that and ask me what I think, I'm going to say it's not the trade for me. It's not that super high probability setup I'm looking for. I want to see every time they hit that contract, the price keeps increasing every time. Ask or above ask and sweeps. Again, that's showing me urgency. No solo blocks. We're looking for multiple $1 million flow. It doesn't always have to be multiple $1 million. I've traded flow that's $600,000 in flow. So remember, the dollar amount is just one piece of the puzzle. Does it have to be ask or sweeps? That's just one piece of the puzzle. So we want to see them hit something over and over. It has to be very specific with that same strike, same expiration that they're hitting. I want the contract price driven up every time they do it. I want it to be ask side. I want it to be sweeps. I want it to be multiple millions of dollars of flow. If I see every one of those in the specific flow that I'm looking at, does that mean the flow is going to work out and be profitable? No. But it means there's a very good chance that it will be. There's a very high probability that it will. And think about that. If someone's dumping multiple millions of dollars and they're hitting the same strike, same expiration over and over and over, and every time they hit it, the contract price goes up, but that doesn't stop them from buying. They're actually buying more of it at those higher prices. It's a sweep. It's above the ask, meaning they don't care what they pay for it. What is that telling us? That's telling us size, usually time, and definitely urgency. So the time component just means instead of a contract that expires in 2 weeks, I'd like to see contracts that expire 2 or 3 months, especially if they're out of the money. If they're out of the money a little bit, I don't want to see a month of time on it. I want to see 4, 5, 6 months of time. So size, time, and urgency sum up what we're looking for, and this checklist spells out my personal criteria. So if you post flow and it's a bunch of different strikes and expirations and you say, what do you think of this? I say it's not the type of flow I'm looking for. If the contract price isn't increasing in your screenshot, I'm going to tell you it's not the type of flow I'm looking for. If you see 4 lines of flow and they're all 4 blocks, it's not the type of flow I'm looking for. If you see a solo block for $17 million, it's not the type of flow I'm looking for. That doesn't mean don't trade it. It just means it's not the trade for me. The trades for me are very specific as far as what I'm going to follow, and that's why I have the success that I do. It's not because I'm such a genius as far as trading. It's because I'm very specific about what I'm going to follow. When you stick to that criteria, when you're very specific about what trades you're going to follow, you will see your success rate skyrocket. You're going to get in trades that generally do very well, not just good, but very well, and you're going to get into more of those trades. So not only are the trades that you're getting into consistently profiting, but they're profiting more so than any other trade you might take. And think about why. Again, the big money is not putting $6 million into a trade to make 40 cents on that options contract. The big money is not putting $6 million into a trade to make 40 cents on an options contract. So when you see them dumping money into these contracts, they're reasonably sure they're going to make a good return on them. So by making sure we're very specific about what we follow, it's that discipline, that the reason we're so specific, that's what's making us so successful with this. People ask all the time, what alerts do you follow? I have the alerts turned off. Let me go to Black Box. If I go to the main page here, when I'm trading, you'll see the alerts are turned off. The audio and the visual, I do not have alerts turned on. I cannot tell you what alerts throughout the entire day. I have zero clue on what's alerting me. I don't watch the alerts. I don't pay attention to the alerts. I'm watching the flow. By watching the flow, I can get into these trades before they alert. Now, I do use the app, so I do have the alerts coming through to my phone, but I'm in these trades before the scanner actually alerts them to us because I'm watching the flow live. And if you go to the alerts, look how many alerts we had today. Look how many alerts we had. If you tried to follow every single one of these, you better have 1, a ton of buying power, 2, a ton of attention, because some of these are coming in back to back. And with all that buying power and attention, these top 2 were 225% gain. That's awesome. 116%, awesome. 90%, awesome. If we go to the bottom, look how many of these alerts did absolute crap. So if you're trying to find alerts and you're going, well, I'm just going to follow the roulette bullish. Well, this one was crap. This one was crap. This one was crap. Well, I'm just going to follow rapid fire. Well, this one was crap. Well, just follow the repeater, because if it's a repeater, that means they hit it over and over, right? Crap, crap, crap. So if you're just following the alerts, waiting to trade based on an alert, you're not going to do well as a flow trader. The alerts are a good starting point if you're not watching this live throughout the day. But look how many alerts we have that just didn't do well. The reason I am much better than the performance of the alerts is because I'm very specific about what I'm going to follow. I want that really drilled into your head, because we have people trading 50, 60, 70 times a day off of the flow, and they're sending me DMs about, man, I just can't make this work. I'm following everything I see. That's why, because you're just following every single thing that you see. That's not the way to be a flow trader. You want to be very specific. You want to be very disciplined. You want to have a ton of patience. Don't trade until you see the right flow. When you see the right flow, pounce. When you see it, no hesitation, pounce on these trades. When you don't see the right flow, don't trade. Now, if you want to trade technical analysis, that's different. If I don't see the right flow, I can pull up a chart and trade technical analysis. I used to trade 100% technical analysis. Then I started flow trading. It was probably 50-50. These days, it's 95% flow trades, 5% technical analysis. There are days where I just don't see the right type of flow I'm looking for. So I'll still pull up the charts and trade based on charts. But most of my trading these days is just flow. And my stress level during trading is 0. Because I know I got into this trade because I was following someone that just put $8 million into the trade. So what happens with this trade? I don't care, because they have 8 million exposed. I might have 800. So they got me into the trade because they're willing to expose that kind of money. I just don't stress about the trade. And our performance, again, it shows you that we're just picking the right trades. Now I've got one more question for you guys, and then it's Q&A time. My last question to you guys, and you can answer honestly. You don't have to pretend because you think I'm looking for the right answer. My last question to you guys is, how many of you guys are going to look at flow differently tomorrow than you did today with the information you now have? Did this class change the way you see flow? And so far, all the answers coming in are yes, and that's usually how it is. If the answer is no, that's okay. I'm not going to yell at you. If I just confused you tonight, take the class a few times, take the live trading seminars, because again, when Charlie's looking at flow and talking about it live, you're going to hear him say the exact same things I'm talking about now. So when I say we're looking for size, time, and urgency, on the seminar with Charlie, he might look at flow and say, you know what, I like that one, but it doesn't have the urgency to it. There's not enough size on that one. So the way I teach flow is the way that we both trade. The way we both trade is very similar because we're looking for the exact same things. Now, Q&A time. So you guys get the floor. If you've asked me a question that I didn't get to, just type it again because sometimes the questions come in pretty quick. We're going to do 5, 10, 15 minutes of answering your questions. So you guys go ahead and type in that question box. Is following the exact same expiration and strike mandatory? It's not mandatory, but it is very highly recommended. The only time we will change something is if we change the strike. So let's say they're going out for 6 months and they want something $10 out of the money. We might go 6 months, but make it only $5 out of the money. Otherwise, just follow the exact same contract because there's a reason they're buying that contract. And if you say, well, you know what, I can't afford that one, can I go further out of the money? You can, but you're losing the probability. Stick to the exact same contract the flow is buying. There's a reason they want September. There's a reason they want the $100 calls. If they didn't need September, they wouldn't buy September. They wouldn't pay the premium for more time than they really need. So that's why flow trading is extremely easy. You just follow the exact same contract the big money is trading. So you only post flow on StockTwits, not Discord. I'm on the black box chat room from bell to bell usually, but I'm definitely not on Discord throughout the day. I post on StockTwits, Instagram, and Twitter under 7-Star Mike and Trade Talk Media. Trade Talk Media is more where I'm going to post the actual flows, but you definitely do not see me on Discord during the day. I'll pop in there and post a chart or post something about a trade I know a bunch of us are in from time to time, but I'm not on Discord during the day for the most part. To confirm, you know, big money is still in the trade, is that when we don't see bid side? Yes, but you can also check the OI from day to day to make sure it's not dropping. But if you're in a position, you're going to kind of know what positions you're in. So when you start seeing them come in bid side, it'll kind of capture your attention. So if you don't see any bid side activity, they're probably still in it. If you want to double check, you can go to the options chain and look up the OI. And as long as the OI doesn't drop, they're still in it. Confused about identifying buyers exiting their trades. I don't have another example, but just because I just made that screenshot for it. You're going to see a lot of ask side turn into bid side. It's pretty clear, it's pretty obvious. So you just have to spend enough time with the scanner to see examples over and over. I don't have screenshots of a bunch of them because I just did the one for the presentation. How do you differentiate buying at the bid and selling at the bid? So if it's buying and it's bid side, you're going to see ask, 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 bid, bid, ask, 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 ask. There's going to be a few bid sides mixed in. If it's selling, it's going to be bid, 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 bid. I think I might have a graphic for that. Let me see if I can find that real quick. I might not be able to. No. I'll see if I can remember to take a good screenshot of some of those sometimes. But if you see a bunch of ask side and 1 or 2 bid sides, then it's actually, you know what I can do? Let's go to the 20 trades room. There's something in here for sure somewhere. So this one here, this is a bid side sweep, right? So people are going to see this, they're going to see this, and then they're going to say, oh my God, they're closing out all of those. They're not. They're buying at 133, they're buying at 135, they're not closing at 135, and then going back to buying at 136, 136. So the timestamps are too close together. They're not buying 788, buying 421, and then closing 269, and then going back to buying 118 and 241. So even though you see bid side here, that's the same buyer opening a position because we have ask, then blank, then bid, then blank, then above ask. So the ask and the above ask here are telling me this is an opening transaction. These three that are either blank or bid are still opening. And we know that because they're sandwiched between ask and above ask, and this all happened within minutes of each other. So people will see this, they'll get into this one. This is a $3 million sweep. They'll get into the position, they'll see this and go, oh my God, they're closing them already. They didn't buy them at 133 and then close them at 135. That's just not how they trade. So you can go through that room there and see some examples. What are your thoughts when you see limit orders mixed in with otherwise good-looking flow? Well, we have no idea if they're limit orders or not. The flow doesn't tell you whether it's a market or a limit order. We have zero clue on that. So when you see a couple good yellows, do you click on the stock and look at all the hits? Yes. When I see something that I like, it's capturing my attention, I click on the specific ticker and the specific contract, and I'm going to narrow it down. So let's say we see Mara right here, and I see, oh, you know what? They've been hitting that one a few times. Let me see what's going on with that. I'm going to click on that specific contract, isolate it, and then take a look at it and say, okay, that meets the criteria. I'm in the trade, or no, I don't quite like that one. I'm not in that trade. And since I'm here using this as an example, let's look at size, time, and urgency. Time is 3:12. This expires tomorrow, so there's no time on it. Urgency, these are ask side, above ask, so there's some urgency there. Some sweeps mixed in with blocks, so urgency, it's kind of there. Dollar amount, 0. Nothing about this would excite me. Now, if I looked at the chart and decided I like this trade, I might follow this flow based on the chart and the flow, but the flow itself isn't enough for me to get into it based on the flow. I would have to like the trade setup to follow this. Hopefully that makes sense. If it was the right flow that was just knockout perfect flow, I don't need the chart. If I like the flow, but I'm like, you know what, it's not the best looking flow, but I like it, I'm going to look at the chart and say, okay, I agree with this trade, and then follow it that way. The contract price is actually going down and then back up, so 169, 146, 1. So the contract price is going in the wrong direction. So this flow is just bad flow in almost every sense of the word. And I just randomly picked on that. I wasn't choosing a good example or not. It just happened to be a perfect example of what not to follow. Do you filter greater than 500,000? No, and I'm glad you asked that. Filters. These are my filters: puts, calls, yellow, white, magenta, and market cap. That is it. That is always it. That is only it. That is it. That is it. That is it. Do not filter for $500,000. You guys are going to screw up the flow. Do not filter for $200,000. You guys are going to screw up the flow. Now, I see this all the time. I want to see all the flow, so I'm going to have above ask, below bid, at or above ask, at or below bid. You don't see all the flow like that. You're telling the scanner, don't show you anything that fills between the bid and the ask. I will post flow all the time, and someone says, I don't see that $3 million trade. How come? I've got all these checked. If you want to see all of the flow, do not check those filters. This is my personal trading: puts, calls, yellow, white, magenta, and market cap. That is it. That is it. That is it. The more you filter the flow, you're telling the scanner, show me less information. Now, here's how Charlie trades. We don't trade puts based on the flow, so he doesn't look at the puts. He will look at above ask and at or above ask. So what he's seeing is basically the aggressive entries for call positions, which is what we're looking for. Before he gets into a trade, he will uncheck these two and see the full picture. Before he gets into a trade, he will make sure he sees the full picture. So if you see Charlie's setup, his looks like this: above ask and at or above ask, and he does not look at puts. Mine is that I do look at puts, and I don't want those checked. So that's where we differ. The flow we're looking at is the exact same flow. He's just not seeing all of the flow that the scanner picks up. I'm seeing more of it, but the flow that we choose to trade will be the exact same flow. For him, before he enters a trade, he just has to go and uncheck those two filters to see if there's other flow for that contract. I don't like that extra step, so I just leave it all on the screen. So the trades we're getting in are the same. The filters we use to find it are a little different, but if you guys are doing this 500,000 filter, you're going to miss a ton of flow. A ton of good flow. What is the link address for Trade Talk Media? So it's literally just Trade Talk Media on Instagram, Twitter, StockTwits, and YouTube, or tradetalkmedia.com, but that's not actually up to date currently because I have to change my hosting. How can you check if the big money is in the trade if we're 1 week in the trade? You've got to watch the flow. If you're in a trade, you're going to notice when they start hitting the same contract bid side. Or again, you can just check the OI if you want to do that. Are you just clicking through symbols coming in the options flow? No, I'm just watching it live, and when something catches my eye, I'm clicking it at that point, but you don't have to click through a bunch of stuff. Just watch it flow through live. When you see the same name and the same contract over and over and over again, it's going to capture your attention. We don't have to write then. I mean, I don't have to write anything down just because I know the pattern I'm looking for. I either see it or I don't. I'm not looking at something now and then 40 minutes later seeing the same contract. So there's nothing for me to really write down. I want to see it hit over and over. And if they hit it over and over, you don't even have time to write it down. You just get into the trade. Earlier you mentioned Visa. What do you mean they are the same contract? They're buying the exact same contract over and over again. Is there a way to set StockTwits to see you? You just have to go to StockTwits and follow that account. I thought OI stays the same until the end of the day. It does. OI, I don't know when OI changes, but it's sometime before the opening bell the next day. So it won't change at the closing bell, but before the opening bell the next day, the OI resets to whatever the new number would be. What scanner did you use to find KHC? That's not a scanner. That was just a technical analysis trade. Do you go on options radio? I don't. Can you explain open interest? Open interest is the number of contracts currently open at the start of the day. So if there's open interest of 500, that means there's 500 contracts that people are holding in that position. If I buy 100 contracts, the open interest would be 600 tomorrow. If I buy 100 contracts but then sell 100 contracts, the open interest would still be 500 tomorrow. So open interest is just at the start of the day, how many contracts are people currently holding? How important is the bullish and bearish flow? 0. I don't look at that at all. I wish it wasn't even on there. OI should remain the same the following day for said position. If OI stays the same, that just means people weren't opening or closing new positions. Trade management is the biggest hurdle for new traders. Yes, it is. People want to become millionaires overnight, and those are the people that are not trading 6 months later. Can you recommend resources? I don't have any. It's just experience, but we talk about it in Q&A session. We talk about it in after hours chats all the time. Number 1, don't put your entire account into a single trade. Number 2, don't expect to get rich overnight. Number 3, close your losing trades. Don't let them go to 0. So you can follow your option you're in to check if closing calls are coming in. Yeah, I'm just watching the flow. If I'm in a trade and 6 days later I see the contracts that I'm in all of a sudden coming in bid side, I know that the big money is exiting the position. You're going to see it because there's so much of it coming in when they open the position. You're likely going to see the exact same amount coming in closing the position. It would be rare that they would do 15 trades to open a position of that size and then close it out in one trade. So you'd probably see it a few times on the screen. So you're not really searching for anything. You should know what contracts you're currently holding. If you don't know what contracts you're currently holding, you probably have too many positions open. So I just know what positions I'm in, and if I see it coming across the scanner bid side, I know that that's the big money exiting. But I'm out before the big money exits anyway, so I never really have to worry about that. But I know what contracts I'm in. So if I see them coming across the scanner, I just know that, oh, I'm in that contract, and now I see the big money's exiting. What do you make of Tesla today? I make 0. I do not follow Tesla flow. I trade Tesla, but not based on flow. There's too much of it. There's too many people that think it's going to 10,000. Just as many people think it's going to 0. So the flow for Tesla just won't stand out for the most part. So I don't even evaluate Tesla flow. How do you quickly get into the trade? Are you buying options at market? Yes, I'm a market order guy because when I see the entry, I want to be in the position. I don't care what I get filled at. When I see the entry, I want to be in it. When I see the exit, I want to be out. So I just do market orders. I'm not concerned with setting a limit order. If it doesn't fill, then I have to adjust it. If that doesn't fill, I have to adjust it. And then I might have missed the trade by 60 cents. So I just do markets in, markets out. Can you describe what multi-leg? Multi-leg is going to be your condors, your spreads. I don't trade any of that, so I don't look at that flow at all. What are orders with no A, AA, B, or BB? Those are just filled between the spread. What do you think of NLS from 3-2? Now you're going back a few days. Oh, NLS, I'm in that one. I like that flow. I don't have to look at the flow. I already know I like it because I'm in that one. My question would be on smaller accounts, say 3,000 and under, would you say to stay under a certain contract price? Yes. So if we see, let's find Netflix. This trade right here was $28. So for an options contract, a single contract is $2,800. These made, I think, about $7 or $8 max, maybe $10 at its peak, and then it came down a little. If you have a $10,000 account, you do not want to put a $2,800 contract in that account. So you definitely want to stick to certain flow that's going to meet your trade criteria. Risk management. If you have a $10,000 account, you do not put a $2,800 contract in that account. So if your account is $3,000, you probably want to stick to contracts that might be $200, maybe $300, but you don't want to be putting $800 contracts in a $3,000 account. That's going to be poor risk management. When we're watching the flow, are we looking first at size? So I'm just watching the ticker. When I see the same ticker over and over, I'm just making sure it's the same contract that's being hit over and over. Once I see the same contract hit over and over, I'm looking at the size of the trades. Once I see the same contract hit over and over with a good amount of money, I'm usually in the trade. Do you look at dark pools? Yes, I have. When I'm trading, I have this study selected. So when dark pools come in, it'll be right on the chart. I don't use the alert stream because I'm in the chat room. So when I have chat selected during the entire trading day, this is where I'm over here chatting. So I can't be on the alert stream and chat. So I have the dark pool on the actual charts. I don't use them specifically to trade. I use them as potential support and resistance levels, but if the flow is the right flow, I'm not waiting for dark pool to come in. If the right flow is there, I'm trading it. I do look at Mel's report every night though and look for potential setups that I like based on dark pool. The market cap filter filters out anything that has a market cap above $0.75 trillion. So you won't see flow for Tesla. Well, now you will for Tesla because it dipped below that. You won't see flow for Amazon, Microsoft, Facebook, Apple. I don't trade those tickers based on flow. There's so much flow of it, so I just don't want to look at that flow. It slows the screen down quite a bit. Do we have to enter black box login on Twitter to connect to Trade Talk Media? Trade Talk Media is just my Twitter account. You don't have to log in anything. I mean, you have to have a Twitter account to see Twitter, but Trade Talk Media is just my second account for social media. Do we follow the exact expiration date? Yes, always follow what the big money is trading. There's a reason they want that time. There's a reason they want that strike. Just follow them right into it. Do you watch bullish flow? Nope. I trade off of TradeStation, and when you have this TradeStation signed in, it appears down here. So most active calls, puts, bullish, bearish. I don't even see this section. I have my TradeStation information there. This is useless information. Most active calls, most active puts doesn't mean jack squat. You guys really don't need to pay attention to that. You will not be a successful flow trader waiting for most active calls and going, ooh, I should trade Tesla. Ooh, I should trade EXPE. That's not how it's done. You don't need that information. Kind of confused with your filter as it shows. Do you see or not see AA and BB? With my filters, I see everything that comes through the scanner. Again, I don't want to tell the scanner, don't show me any kind of information. So I just let it show me everything. And then I'm just waiting to see, because I don't get to tell the big money how to trade. If they're filling something between the spread and I only have above ask checked, I won't see that. I don't get to tell them they have to pay above the ask for any trade. So I'm not telling the scanner what to show me. I want to see everything. And however it comes across the scanner, I'm going to see it. About 2 a.m. OI resets. Thank you, Stephen. I didn't know a specific time on that, but by the time you wake up in the morning and start trading, it will be set. So Stephen's saying 2 a.m. you can check on that for OI resets. Do you post the flow on Black Box before on StockTwits? Sometimes, but typically no. Where's the best place to see your trades? The trades that I'm personally in are typically what I'm posting on Trade Talk Media. That's just kind of the arm I use for educational flow trading information. Do you post your trades on the main chat when you go into a trade? Not all the time. Learning to take profits has been an issue. Yes, a lot of people are up 40% and they go, oh, this is going to 100%. And then the next day they're down 60% and pissed off. Definitely learn to take profits. Whether it's a day trade or a scalp or a swing trade, there's a point where you just have to protect those profits. Dark pool is where the big money trades on exchange. They're private exchanges basically, so we don't get to see what they're doing until they report, and they don't have to report those trades right away. So sometimes we get delayed information. I do use it as potential support and resistance levels because the big money those are the traders that have the ability to move the markets. So we want to know what levels they're trading tickers at. Is there a way to search history of flow? Yes, there's a historical button, and then you come down here and you put what dates you want to see, and then it shows you flow for those specific dates. How many positions a new trade should have at one time? So if you're new, I would recommend 1 or 2 trades only, because if you have more than that, you're not watching the trade, so you're not learning on how to manage it. If you're new and you're just following people into trades, you're not learning a damn thing about trading. So have 1 position and watch that position. Watch how it reacts. Watch how it reacts to the market. Watch how it reacts to flow or to news or to technical levels. Watch that 1 ticker and understand why it's doing what it's doing. And then when you're experienced, you can have a bunch of positions open at once and monitor them all. If you're brand new and you have 7 positions open, you're probably not managing those 7 positions effectively, because you can't watch 7 things at once if you're new and trying to figure out trading, and then all this stuff is going on in real time. Do you use chart on Black Box when you need it? So I use the chart on Black Box as like my setup here is basically the chat room over here, flow here, the chart, and then down here I have TradeStation. So when I'm watching a trade here, when I'm watching it develop, if I see something that I like, let's just say BABA, this is capturing my attention, I want to see BABA. When I click on that, the chart automatically goes to BABA. So what I can see is what have we done today? And then I go to my other platform and type in BABA, and I can see the different time frames that I'm looking at there. So my first indication of what's going on is this direction right here. So I do use the black box charts. I don't do my technical analysis on them because I use Thinkorswim, which is, to me, just the more powerful, easier way to chart, because that's where I learned. The black box charting is actually really powerful, but I just learned on TOS, and I have my lines already drawn on TOS, so I just use TOS as my main charting. I use spreads on expensive stocks. Will that cause problems? No, it'll just change your performance on them. I don't do any of that. So when I see an expensive stock that I like, I just either buy the contracts, or I just decide, you know what, I don't want to spend that much on a contract. I'm going to skip it and move on to the next one. So there's always trades to take. If you see something that you like, but it's too expensive, you can always just say, you know what, I'm going to wait for the next trade. But if you do spreads to limit that, I mean, it still works. It's just a different type of trading, and you won't get the same results necessarily, but you're still going to be able to participate in upside and profits. Is TradeStation easier for a new trader than Ameritrade? I wouldn't necessarily say easier. If you use market orders, TradeStation is a million times better than TOS. It seems it's free access to Trade Talk Media on Twitter for non-black box. Yes, Twitter is completely free. It's not a private account. Best way to set up, I have MacBook, iPad, laptop, needs some type of dual screen. I'm comfortable with my setup, and when I don't have my setup, I'm not as successful. My setup is 4 screens plus a cell phone. The cell phone I don't use too often. It's in front of me so I can see certain information, but I don't use it. On my left is the trade execution. So at a minimum, I recommend 2 screens if you can do that. 1 screen you want your trade execution, so you never have to change. If you want to enter a trade, it's there. You don't have to change screens. On the screen in front of me is it's a big screen TV. It's not a computer monitor. It's a big screen TV. It has multiple charts on it. On my right side is a smaller screen that has more charts on it, but it's going to be a ticker specific. So in front of me, I'm looking at a bunch of tickers. On the right side, I'm looking at a specific ticker. And then on a laptop in front of me, I've got the flow. So I'm watching flow in front of me. I've got my execution screen on the left, and in front of me, behind the laptop and to the right, I have just a bunch of charts opened up. At the very least, I suggest a screen for the execution and a screen for your charting. With 2 screens, it would have to be charting / flow, or you can just do your charting right on Blackbox and just do flow and chart on 1 screen and execution on another. That way, you don't have to switch between screens to get your orders in. If you're trading on TradeStation, you can actually do that right from Blackbox. If you're trading flow, it's just 2 clicks and you're in the trade. So you would need less screens to do it that way. You don't need 4 monitors. It's just the way I have it set up. The information is exactly what I want to see, how I want to see it. So I'm comfortable doing that, but you certainly don't need 4. I do recommend 2 at least. So again, you don't have to change your screen from your chart to your execution and then back to your chart. And then when you want to close, back to the execution. I like everything just right where I want it. I see the chart and I enter the trade. There's no screen switching at all. What % of your account do you trade options and others for stocks? 100% options. I don't trade stocks at all anymore. I haven't traded stocks in probably 4 years now. I'm a 100% options trader. When I look at today's bullish flow, I can see the most alerted tickers you mentioned. Just wondering if looking at that and then confirming, I don't have to read the rest of your question. Ignore that bullish flow, bearish flow. I don't look at that screen at all. You do not need it to learn how to trade flow. If you like it, by all means use it. Don't do something just because I do or because I don't, but you don't need that section to be a flow trader. I don't look at that and then confirm anything. I'm just watching the flow live. I'm literally just watching flow throughout the day. And when I see flow I like, I pull up the order entry and I place the order. If I like the flow, but it's not stellar flow, I pull up the chart. I decide if the flow plus the chart makes it a little higher probability than just the flow itself, and I place the order. So there's no EMA crossing this, there's no death cross, there's no, 3 pregnant squirrel pattern on the charts. I'm literally just watching flow. And the flow shows me what to trade. If I don't see what the flow is really giving me what I want to get out of it, I just don't trade. Now, if there's days where I don't see flow at all that I like, I will look at the charts and trade based on technical analysis. So I'm not a 100% flow trader, but I'm pretty close to it these days because there's just plenty of flow that gives us monster moves that just generates enough profit where you can literally just wait for the right flow and be a flow trader. Looking at your Square trade, did you just enter after seeing 2 contracts? Let's pull up Square. I don't remember the flow specifically. There was only 2. So yes, when you see a $1.47 million sweep on something like that, it's in the money. We like in the money. This one's a little far in the money, which is why it costs so much. So sometimes if it's too far in the money, I don't do those trades. But Square, there's a lot of chatter around Square. This is a $1.47 million sweep after 700,000. That, it only took those 2 trades for me to like that flow. Sometimes you'll see those 2 trades and it's not enough. So again, remember, they're just pieces of the puzzle. In that case, the way that flow came in was just enough to be like, that's all I need to see on it. Sometimes I want to see more, sometimes that's enough. What in BABA interests? I don't think there was anything I liked about BABA today. My memory sucks, so I have to actually scroll through this to see what I traded, but BABA doesn't ring a bell that I traded today. Yeah, I didn't trade BABA today. There was nothing, I mean, there might have been something I missed, but there's nothing that I remember about BABA that interests me at all. $3.5 million out of the institutions. Well, then there might have definitely been something that I missed. Let's see. This one looks like I missed. So, yeah, so the 4-1-2-6-250 calls, this is a pretty good looking flow. It's not, so for BABA, we want to see a lot of BABA flow. So all said and done, this isn't a lot of dollars. The 117, the 381, 251, 152, this is good dollar flow. But for BABA, when we see them hit BABA, it's for like 15 million or 7 million. So these are good numbers, but not amazing numbers. Time, not a lot of time. It expires in a few weeks. 260, 250, it's trading 241, so it's a little bit out of the money. Contract price is moving up. So this is okay flow. It's not monster flow, but it's pretty good looking flow. That's not one that I would enter automatically based on, I see that and I go, ooh, I gotta have BABA, but it's pretty decent looking flow. Mel's dark pool, she's highlighting the stuff that stands out to her. So those are things you want to look at, the levels the big money is trading for potential support and resistance. Daniel, I apologize on that. You definitely don't want to put 3 pregnant squirrels into your Google browser and hit enter. I'm sure you'll find some interesting graphics there. That is not a real chart pattern. Those started from, Tastyworks has something called a jaded lizard. And one day we were all just thinking like, what are these crazy names they come up with stuff? So 3 pregnant squirrels is not an actual chart pattern. It's what I use when I'm kind of making fun of people that basically, I've got 150 chart patterns memorized. This is, you know, the doji and this is that and the soldiers and baby, abandoned baby and all that stuff. You don't need to know any of that. It's good to know just for reference. And I know that stuff and I kind of watch for it when I'm trading, but I don't really, I'm not looking for a specific chart pattern. I'm looking for the price action, not the name of a specific candle formation. I just want to see the price action. So when we talk about those crazy names, we're kind of just making fun of some of that stuff that's out there. Does the flow being a sweep or block make a difference when other checkpoints are hit? Yes. Remember what I said earlier, we want urgency. Blocks are not urgent. If they're blocks mixed in with sweeps, they're fine. If it's all blocks, I am not taking those trades. Did you trade CAN? So I didn't. I actually, if I remember correctly, I like that flow, but I didn't take that trade personally. I don't remember the flow, but I remember looking at that and thinking there's a lot of it. So I'd have to pull it up. I didn't take that trade. I didn't take the CAN trade, but I do remember looking at the flow thinking there's quite a bit of that. Would you agree the flow for WDC shows big money getting in and then 3-4 getting out? Let's take a look. WDC has had a ton of flow over the past few weeks. What are we looking for? 224. 224 exiting on 3-4. Actually, I'm going to have to start with 224. What's the contract? 716, 72.50. All right. And then let's extend that to, you're saying they got out on 3-4. Nope, I messed up the start date. 224 to 3-4. So let's go 224 to 3-4. So you can see a bunch of ask side activity here. So that's all looking good. Ask, ask, ask. A lot of bid side. I would say that's a good chance those are exiting the positions. And if you look, they're getting in at mid 8s and 9s. They're getting out at 4s. So that looks like they might have cut that for a 50% haircut. The other thing you want to do is add up the contracts here. So let's just say this adds up to 6,000 contracts, and then you see 300 contracts on the bid. You wouldn't be concerned about that. But if they 6,000 opened and then you start getting like 4,000 closed, then that's something you want to look at and be concerned about. So that flow, it does look like they closed that out for a loss of not quite 50%, maybe 30 or 40%. It does look like they closed that one out for a loss. Flow is also relative to the amount of shares available on a certain stock. Yes. So $1 million of Tesla, I wouldn't even consider looking at the flow further. $1 million of Twitter, I'm going to look at that in more detail. So Amazon, Tesla, Apple, Facebook, a lot of these tickers, if you see $1 million of flow, it's not going to capture. In fact, the reason I put that on Netflix, it says $1 million sweep, would like to see more for that name though. So for Netflix, $1 million is enough to grab my attention, and I'm going to watch it closely and see what it does. And the chart makes sense to get into it. But for Netflix, I would typically want to see, preferably 2 million, 3 million or more. So $1 million of Netflix doesn't give me the same response as $1 million of Twitter. So it is kind of relative to the size of the ticker itself. Are mornings best time for trades? No, unless you're scalping and day trading. Mornings are good because of volatility, but if you're talking about flow trades come whenever. We've seen flow trades that we get in right at the bell. We've seen flow trades at the closing bell. When the flow comes in for both calls and puts in the alert section within 15-20 minutes, do you take a bias? No. I don't look at the alerts first of all, so I couldn't even tell you what alerts, but if you're seeing calls and puts on the same ticker, it's not the flow that we're looking for. Remember, consistency. So if you're seeing calls and then puts, there's no consistency on what they're trying to do with that. If the flow looks good for both sides, it's just not a trade I'm going to take, because just as many people that think it's going up think it's going down. So who's right? Could be either one of them. If you see 150 people saying, oh, we're going to put all of our money into Twitter going up, that's something you might want to follow. If you see 50 people saying it's going up and 50 people saying it's going down, I'm just not going to follow that. There's no consistency there as far as what people are willing to do with their money. How do you determine the dollar value to capture my attention? I don't. Remember, the dollar amounts is just one piece of the puzzle. So I might trade 600,000 and ignore 4 million. I might trade 4 million of one ticker, but not 4 million of another. So the dollar amount is just one piece of the puzzle. It all has to make sense together. When day trading weeklies, do you use VWAP with support and resistance or multiple indicators? So for me, I am the most simple form of trader ever. When I'm trading weeklies, I don't use any indicators. If you go to Twitter, you probably have to scroll a little bit because most of my pictures now are flow trades. But if you look at the technical analysis I do, it's literally 1 or 2 lines of support and resistance or a trend line. That's it. I don't use indicators at all. And I am finally down to the bottom of the screen, so we're going to call it a night here. If you guys have questions, I'll put this graphic up one more time. These are the ways you can reach me. Don't be shy. We want you guys to be successful with this. So if you have questions, if you have flow you like but you're not sure about it, send it to me and say, hey, what do you think about this? If it's a solo block and you send it to me, I'm eventually going to block you because you're just not paying attention to the flow class. So flow is a lot different now for you guys than it was earlier today. I want you guys to really drill into that information and make sure it sticks in your head, because that's the difference between flow traders who make a killing trading flow and those who trade flow and they go, you know what, it's like hit or miss. This just doesn't work. I get a bunch of messages in the main chat that are saying either flow doesn't work or flow's not good in this circumstance, and it drives me nuts because flow is pretty much all I trade, and I make a living trading flow. If you really understand it, it works. So the people that say it doesn't work, they don't understand the good flow versus the bad flow. It does take some effort to understand the good flow versus the bad flow. Once you understand that though, trading flow there's zero stress because we're just following someone who put multiple millions of dollars into the market. That's why it's so stress-free, because we're just following them. They're exposing that kind of money. All I'm doing is following them in. So if you guys have questions on flow, feel free to send it to me. Again, if it's that, do you think this is good flow? And it's all, solo blocks after solo block, eventually I'm going to say, listen, you got to take the time to put in a little bit more effort, but don't be shy sending flow saying, I think this is good. What do you think of it? I'm more than happy to look it over and say why I like it or why I don't. We want you to be successful, because if I step away from the screen, there's times where I come back to the screen, I'm basically getting some breakfast. I come back to the screen and someone says, 4 posts up, hey, what do you guys think of this flow? And then I can go pull it up and say, okay, that's something worth, looking into. And I might have been away from the screen for a minute. So the more eyes we have on the right flow, the more successful we're all going to be as flow traders. So we want everyone to be successful so everyone can point out good looking flow. And that way we don't have to waste time pulling up flow that's absolute crap, because that takes our attention away from finding the good stuff. So we want everyone to be very comfortable, very specific, very accomplished flow traders so that we can all just be a better community. So again, reach out if you have questions, don't be shy. If you send me questions tonight, I will answer them tonight. Probably not right now because I'm gonna go grab some food. But after that, if you send me questions, I will answer them before I go to bed tonight. So before the opening bell, you'll have answers to all of your questions. And on that note, I will see you guys tomorrow. Thanks, guys. Have a good one.